Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Shankara Buildpro, the stock that has fallen from 2000 all the way to 200 and even below that. Let's understand what is the business of the company and whether you should invest at these abysmal levels. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Shankara Buildpro, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel. It will help you ask any questions on market and companies and different sectors, and I'll give you one line answers. It starts from mere $2 a month and goes up to $10 a month. Once you have a $10 membership, you'll be able to view my portfolio watch list and have queries once a day through one liners, and you'll also have if you need a detailed market analysis or company analysis, you can directly email me as well. Now, about Shankara Buildpro, the company was established in 1997, and they provide tiles and specialty building materials. They also provide roof sheets, steel pipes, and tubes. So, a number of products that Shankara provides. They are not only into bath fittings and tiles. So, a gamut of products under one roof is provided by Shankara. They had a stellar IPO. The IPO came in, and the stock nearly doubled or tripled post the IPO, and all was hunky dory until the last 2 quarters, when last 2 3 quarters, when the results started to just fall apart. They are currently serving leading clients, so they are also B2B type of business and serving different kind of, you can say, offices across India. If you look at the financials of the company, then the sales of the company has increased by around 16%. This is Q3 FY20 versus Q3 FY19. And there have been a sharp increase in profitability from 2.3 crores all the way to 11.5 crore. There is a reduction of debt, high promoter and institutional holding with only 9% free float. So all things look fine now after the whole huge capitulation of the stock price, because the results have not been great over the last 2 3 quarters, but this quarter results have been good. But you look at the return ratios, and that matters a lot. Return on equity of only 7%, net profit margin of only 4%, and this is what ailing the company, that eventually what the company is providing the investors is very meager returns. And you have companies which can do 15 18%, 20 25% on ROE, and these are the companies that are looked at even in the tiles industry, even in this industry which is into building materials. There are company, even in this stressed environment, companies are doing between 15 to 18% on the mid teens, as I said, but this is into single digit, and this is the biggest reason why no one is trying to get into such a company. Now, if you look at the performance of the company, there's exceptional growth in FY18, and this is the thing. So they came out with an IPO just in the midway of FY18 and just blasted off because the growth was tremendous. The IPO was a big hit. That was an outstanding IPO listing, and the stock went all the way to 1900 2000 levels. Had great potential as a business because they were not only serving, you can say, industries which required bath fittings or tiles, but they were also providing other, you can say, home services, as well as, you can say, office services with the rooftops, etc., for the businesses. See, numbers have been bad, that I agree, but the point is, the last 2 3 quarters before this have been really bad. So numbers are bad. They do not tell the whole story because the company is robust from inside. So, reason for the stock crash, let's understand this. So what happened was bad the first half of FY20. This is what has happened, and this was primarily because of the slowdown in the Indian economy. Now the second whammy has begun with the with what has happened with this lockdown and the curfew thing. So what will happen is the March quarter will also go totally, you can say, worthless. And so three of the four quarters would be really bad, and the numbers would look extremely bad on the bottom line. And that's why no one is now trying to buy into such companies which are into building materials or housing, etc. But in the next 6 months, after next 6 months or 6 to 8 months, we will see a ramp up of things, because I believe that things could get normalized by December, November, December, and we will see even infrastructure companies doing well, and hence the building material products companies would do well. And so the valuations at the moment is not that stressed. So slowing economy hurt the company in the first half, and this curfew and lockdown because of the health hazards has really hurt the company in the second half. Uh, Now, then, high debt was also a burden. So, this is the third point, that debt has really escalated. And these companies which are into infrastructure, real estate, or materials which provide to these sectors have a lot of problems with debt, and they are debt laden. And this is why these companies, I try to avoid these types of companies. So even Shankara Buildpro has had high debt, and now interest cost is really taken a burden because the business has completely collapsed for the moment. As I said, lockdown a further complication has complicated the problems, and low cash and high on credit is what the company is. So the cash levels are also low. Uh, Eventually, the next 6 months looks extremely tough, but the company per se doing the business is very strong in that regard. But current situation and current economic environment or macro environment is not helping the company to do so well. So what needs to be done? Can buy incrementally at these prices and on major declines, but then you should have a good 4 5 year view. 6 months could see even more fall. We could see a market fall as well in the next 6 months of 10 15%. These stocks will fall even further. Numbers need to improve, so keep track of numbers. Maybe from December quarter numbers will try to improve, but this June, even March, June, and September, next 3 quarters could be extremely difficult. The March numbers have also not come in, so take this all into consideration before you put in money into such sector or such companies. uh, it is one of the best in this business, so it is a market leader, and that's why I'm backing this company. But again, the problem remains debt, high debt, and then low cash business. So even though your business would be good, even though you are one of the reputed companies, but if you have high debt on the books, then investors will not like it. So kindly do due diligence before getting into the company. Don't just buy on this recommendation, and all these are not recommendations, these are just my viewpoints. Have less than 5% of the exposure in such companies, because we have seen the fall. It has become like 90% down from the top, from 2000 all the way to 200 and even below. So you have to take these things into consideration before getting into such a company. If you look at the technicals of the company, then 180 to 200 is a massive support. If that goes, we are looking at around 120 levels. The 200 DMA is at 330. So you can imagine that where we are at the moment, extremely weak on charts, and by only above 270, that would be extremely strong at those levels of 270. May see consolidation at these prices. You can accumulate over the next 6 months, but again, take all the things into consideration which I have already mentioned in the video. So this was my video on Shankara Buildpro. Please like and subscribe my channel and hit the bell icon so that you get my videos straight away when I post it. And kindly email me your queries. Thanks a lot for watching.